If somebody's sitting there with a life insurance policy with $10,000 of cash value, but they could do a settlement that would get them 50 or 100, well,
Yeah,
do the math. Which is the better option? Which is the better outcome
absolutely.
for somebody who's going to
Absolutely.
let go of that policy?
And you make it a very, very interesting point when you compare it to your asset as your home, right? That you don't just abandon your home. You know that this is going to be an asset passed to your next generation. And if you don't want to use that home for the next generation, you can sell this. You can, get that equity and get that cash for whatever reason, whatever living expenses or whatever, care expenses that you have. But, coming out of the home, it's a big deal. If you have a life insurance, the permanency and the asset kind of a look of this life insurance itself, it's a very, very important mindset change. Because when I built infinite banking with my clients, and we create a structure, and we are about to finalize that, they always come back and ask me that one question: but what if I have
Hmm.
to surrender this, what if I have to give up this, or what if I can't just afford to continue this, can I just take my cash out? And I always say that you can always take the cash out, it's your cash. But do you have to do that, right? There's so many different options that you can. First of all, let the policy cash value kind of replenish that minimum requirement base pay premium that you have, so that it sustains for yourself. But if there is a need, in this case, you kind of go into the life settlement market, the secondary market, and you can sell it for more money than the cash value that's sitting. It's something in between your death benefit and your cash value.